Welcome to Tradespoon. My name is Vlad Karpel. I'm CEO and founder of Tradespoon, and today we're going to have our weekly strategy roundtable discussion where we talk about current market conditions and answer any questions you might have. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Good morning, Peter. This is my brief bio. Disclosures are very important. I always want to welcome, first of all, welcome new subscribers, type in yes. If this is your first webinar, always welcome new subscribers. Disclosures are very important also. Trading stock and options involve risk, not suitable for everyone. You must be aware of the risk and be willing to accept it in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level. For general education information purposes only, please consult your financial advisor prior to making any trading decisions. Also, should not be assumed that the future trade picks will be profitable or will equal past performance. All right, let's take a look at the market. I'm looking at one of our main models, stock forecast toolbox. For the next 10 days, it still shows a positive trend in spiders, right? Despite that QQQ is a strong negative trend, right? So momentum names have a strong momentum to the downside, and small caps have relatively large, no, I mean, slightly positive, I would say, positive uptrend. So spiders still remains in uptrend. Fighting for the 50-day moving average. We pierced through the 50-day moving average yesterday. We pierced through this gap, right? We basically closed the gap after the, let's zoom in. So the gap after June CPI data, better than expected CPI data, we basically closed that gap, right? And now we're fighting for the 50-day moving average. Still a pretty weak price pattern, right? This is bearish, kind of ABC pattern. Right, A, B, C. Sorry, let's do it again. A, kind of a classical A, B, C. We haven't had such a big momentum to the downside, probably since since 2022, right? I mean, we had pullback this year, but there were, usually they're met with bullish momentum, right? I mean, we had pullback here, but it was 5% in a couple weeks, right? In 3 weeks. So we had, 5 to 7% in basically 3 weeks, where here we have it in 2 weeks. And we'll see where we're going to close. So usually there is a rebound, right? There is maybe another rebound to 550, right? So this is 1, 2, 3. Sometimes there's 4, right? Market is oversold and due for bounce. We tried to stage bounce yesterday unsuccessfully. We tried to stage it today. Trading at the session low. Well, I mean, close is important, right? Friday's close. Right, so is there a wave 5 or wave E? Right. Potentially toward 530 or 520.25 level, right? So this is the next level of support, right? So if this support doesn't hold, right, this is support number 1, then this would be support number 2, somewhere between 520 and 530. And in terms of dealer positioning, we talked about that 530, I mean, 540 had positioning, but not a lot. And if the 540 doesn't hold, right? Right, we have some positioning at 540, right? 8,000, 7,000, that's kind of rolling off, right? That's going to be gone. Next week is going into the Powell speech, Fed decision. We have next level of defense of any meaningful support is 5 5:30. So you have 5:30 next Friday, then August expiration is still 5:30. Not a lot of positioning, right? Only 20,000 VANA. So in terms of stronger positioning, 5:20, right? So I personally think that, you know, Wednesday, right? Wednesday is going to be an important day. I mean, we had PMI data this week. We had flash PMI data. We had PCE data came in, you know, showing that inflation is subsiding. Durable goods were negative yesterday, but GDP was positive, right? Positive surprise on GDP, negative surprise on durable goods. And the key event is Wednesday, FOMC decision, right? Because right now, interest rates are dropping precipitously, right? 2-year yield dropping precipitously. You have yield is normalizing, right? The 2-year is now decisively below 30-year, first time in the past 2 years, right? And continues to shift lower with the expectation that Fed will lower interest rates, right? Fed will lower interest rates. July low probability event, September high probability event based on the future data as of today. On Wednesday, Powell has to say something positive, right? We had the same kind of situation in 2018, right? I like to refer to 2018 because this is when, is John here? Bob was there. I think John is not here. John was there. But 2018 was similar kind of setup, right? Where Fed said we need to start raising interest rates. We need to start raising interest rates. And market dropped about 10%, right? About 10%. And then in December, during December meeting, Powell basically, everybody expected to Powell say that they're going to put it on hold and at least wait. But he did not say that in the December meeting, and then very sharply the market dropped another 10%, right? So I think we're in a similar setup where if Powell delivers what market wants, expects, the market is oversold, 520, 530 is well supported, we should have bounced back, you know, going into August, right? First week, second week of August. If Powell says, well, we're data dependent, you know, blah, 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 same thing that he said a month ago or 2 months ago, right? You might have a pretty large move in currencies market, in the rates market. The market could quickly drop another, I don't know about 10%, but, you know, it's down 5% now, right? Close to 5%. It could quickly drop another 5 to 10%, right? Because 520 is well positioned. But if the 520 doesn't hold, then, you know, right away it opens the door to 500, right? If 520 doesn't hold, it does open the door to 500 rather quickly in terms of positioning. So Powell has to deliver. You know, I'm going to be cautiously optimistic that he will. He kind of, back in 2018, he was pretty new to his job. You know, in the past 6 years, he has gained a lot of experience and wisdom, so let's assume that he's going to deliver what the market wants. So, but I would hedge that event, right? Just because everybody thinks he's going to deliver, that doesn't mean he will deliver, right? But, you know, elections and blah, 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 so that's also contributed. VIX did pull back. We reached the 20 level, close to April high, right? We're at 21. Here we're almost at 20. It's pulling back. We have a strong rotation in small caps, right? We have this kind of a strong push to the upside, flag formation, consolidation, same thing, right? If Powell delivers and interest rates going lower, then I think small caps can continue its rally, along with value stocks. Value stocks are also rallying, right? You can see this huge demand in M earnings, right? This is kind of unprecedented move for a company like M, right? Kind of a blue chip, old school, you know, dividend paying, up 16%, right? Estimated move, I think, was 9%. All right, so you still have these surprises to the upside, right? In these blue chip names where the estimated move was only 5%. Right? So we're talking about, you know, 3-4 standard deviation moves in names like M. Bristol Myers was another one I was watching. Also made maybe not 3 or 4 standard deviation, but definitely 2 standard deviation moves on Bristol Myers. Questions? Sound is good. 10% correction coming soon. This is so yeah. So let's talk about, right. There's different ways to think about this, right? One is that the top is set. It's pretty bearish price pattern, 2 weeks in a row. Very sudden push to the downside on above average volume, kind of a classical putback. You know, the top is set, right? Top is set, and we're trading between 560 on the upside, and I mean I would say somewhere between 520 and 530. I think it's reasonable to assume that we're trading in this range, right? So one, you can say, Vlad, no, Powell's going to lower interest rates. It's still soft landing. We're in election year. Sometimes August could actually be positive. Yeah, maybe mega cap technology stocks are underperforming, but in terms of broadening of participation, high yield is stable. There's no distress in the market, and we're heading higher, right? Powell is going to deliver. He's going to cut the rates. Everybody's excited about that. Small caps, mid caps continue to rally. Value stocks continue to rally, and at some point, mega cap technology are going to catch up, right? Because their earnings are not horrible. And next week we have Apple and Amazon, and they're going to save the day. Okay, that's scenario number one. We break the top at 560. Scenario number two, we're trading in this range, right? It's a pretty bearish pattern from technical perspective. QQQ is below 50-day moving average. Semiconductors below 50-day moving average. And earnings so far, the reaction has been negative. So we're trading in scenario number two, somewhere between 530 and 560. And scenario number three, right? We see signs of recession, right? Credit card default numbers are going higher. Home builder activities heading, is very slow. And, this rotation between value and technology is temporary. And then value stocks will follow the technology stock, and then, technology is already down almost 10%, so it's reasonable to assume that we could drop more than 10%. Okay, so those are the three scenarios, right? Nobody knows exactly what's going to happen. You need to kind of look at the pros and cons for each of the scenario, figure out what your core scenario is, and trade accordingly, right? I would not have all positions long. I personally would not have all positions short. I would go back to game theory and figure out appropriate balance between long and short positions, right? If you're doing stocks, maybe you want to buy buy put or sell calls to hedge some of your positions. If you don't trade options, maybe you want inverse ETF like PSQ or inverse spiders ETF. So those are some of the ways to hedge your portfolio. All right, so 1, 2, or 3, let's see. Bob, no problem. Welcome back. Joseph, 3, okay. 3, right, recession. Signs of recession, soft landing is not the narrative, and anxiety, uncertainty about elections, right? Kamala Harris versus Trump, right? Both candidates have some, pros and cons. So, and market doesn't like uncertainty, right? So, how many of you say 3? Andre, 2. Very good. Bob, Martin, Mark, Michael, Peter, Steve, Trader. Anyone else? 3, 2. Nobody thinks 1, 2. All right, Peter's 1. All right, Peter says 1. All right, thank you for participating. I appreciate it. I'm going to go with 2. Right? I think the top is set, at least short term to medium term. It might stay there till elections, right? It might stay there till elections. So I think the top is set. I would be a seller as we get to 560 until you have a decisive break to the upside. But I think this level will hold, right? There's a lot of positioning, assuming there's no black swan event like regional banks don't default or, some geopolitical risks. Then I think we are trading, we are range bound, right? And we're going to go through this consolidation. But I would be cautious because this, in terms of the momentum, right? I was looking at the momentum, especially in QQQ, assuming we're gonna close, I mean, near today's level or somewhere, right? We haven't had such a sharp pullback in 2 weeks. You have to go back to 2022, right? We're down 10% in the last 2 weeks. We haven't had 10% pullback in 2 weeks. You know, you have to go back to you know, October, right? End of October end of September 2022 to have such a sharp pullbacks, you know, on above average volume. So that's usually bearish. I am watching this uptrend, right, from back the started. Right, so if you connect these two dots, and this, right, we are basically retesting this level. So 450 on QQQ is important, right? If we're gonna have third drop to the downside, then, you know, this pullback could be higher, right? It could be another 10% down to 420, right? If this level doesn't hold. And this is strong level, right? This is March of 2024, right? So basically, if we you know, if the March of this year doesn't hold, right? If the 6 months low doesn't hold, then, you know, the market will, at least QQQ will drop another 10%, and spiders another 5 or 6, assuming there's still rotation into the value stock. So it makes sense to be cautious and hedge your portfolio. Any questions on the stock market? And same thing in NVIDIA, right? NVIDIA broke through this line of support. This is a proxy for AI, you know, optimism. I mean, earnings are still not until 30 days from now, but it already broke through the support level. You know, next level is, you know, March, April, right? To undo all the earnings since last earnings, right? End of May, this is the earnings, NVIDIA earnings. If we break through this week low, we could end up at $90, right? We could end up 90, 95 level for NVIDIA. And we did break through this support level, right? Basically now retesting the reaction to the earnings, right? So this is the close of the May earnings. So if we undo this, you know, it opens up the door to 95 level. So I would watch that level very careful as well. Percentage level 3 sell-off correction. What is percentage is level 3 sell? Sorry, what is the level 3 sell-off, Bob? I'm not sure what that mean. What exactly you mean? Like 3 standard deviations, or maybe you mean something else? But let me know. Okay. Any questions? So in terms of Tradespoon, stock forecast toolbox, right? If you look at the 6 months prediction, the medium term to long term trend is still intact, right? So as long as the spiders is above April lows, right, which is 500, as long as we're above 500, it's still a strong bullish momentum that, you know, might be on pause for a few weeks or months, but we're still in a strong uptrend. On the upside, 576, model sees 540, that it will hold 540. We've seen where the market overshoots the predicted low by as much as even 5%, right? So if there is a 520 print, I would not be surprised, right? In August, well, not in July, but in August, right? After the Fed meeting, if we're at 520, you know, that's, you know, that would be understandable. But 576 is your overhead resistance. So we have a stock forecast toolbox where you can analyze stocks and ETFs, right? You can put alerts here. You can, you know, look at the different sectors that are leading the market or lagging the market. So that's stock forecast toolbox. Every day, I trade these 3 recommendations: either active trader, weekly trader, or monthly trader, right? These are the list of stocks that every day are getting posted today. Which are stocks leading the market? Discover Financial again, right? And I traded Discover Financial in the past few weeks. and it continues to be a strong signal, right? Still strong signal after the earnings. Discover Financial. If you don't have access to, exposure to credit cards or consumer discretionary, DFS, right? It did pull back, but it continues to outperform, up another 1.5%. So model is detecting these long signals. You can trade stock or you can trade options, right? But the idea is you buy at either predicted low, right? If the market is down, you buy at predicted low, 141.39. Probably didn't hit today 149, so you do at the open print 141.62, right? If you look and you don't have, if it gapped up, right, in the morning, if it gapped up, then it's up to you to decide, right? Usually when you participate in live trading room, you'll see me wait 15 minutes, right? I'll wait 15 minutes, wait for stabilization, and then if I still want to long, then I would buy at 143, maybe 143.10, and look for 0.5% profit or 1% profit and close the position, right? So these are short-term trades. You're looking for suggested entry, suggested exit price, 1% target gain, 1% stop loss, use dollar cost average, split the trade into two, right? Same thing with weekly trader. It's a different model, but analyzes different time frame, but you have longer time horizon, right? Taiwan Semiconductors, right? It's oversold. I think it had decent earnings. It will be the same thing, right? But here you look for 2.5% target gain, 2.5% stop loss. Obviously, semiconductors this week pulled back, but it's still doing relatively well after the earnings. I mean, similar to SMH, right? I think maybe doing a little bit better than SMH. Yeah, doing a little bit better than SMH, right? Because the stocks like LRCX are kind of falling off the cliff and at 200-day moving average. Any questions on the stock forecast toolbox? Active trader, weekly, monthly trader. Weekly trader 2.5%. You can see instead of 1% here, you're looking for 2.5%. If you're using an active trader, you want to hold it for a week or two, then you would use the same scenario. Maybe you look for 2% profit. So these are the active trader, weekly trader. In the research center, you could find seasonality chart, right? We talked about that. Usually, market rally into July and then into the August, it starts consolidating and heading lower. It looks like we started this process a little bit earlier. Last year, it was exactly end of August. This year, it's middle of August when it started, right? So a little early, but still August, September are usually volatile for the market and direction is to the downside. And the probability calculator can basically, going back to Bob's question, 1, 2 standard deviation. Right now we're at 527, 550, right? This is where you could expect the market to trade, right? And 2 standard deviation would be, 477. I think it's pretty aggressive, but that would be how you would look at the market in terms of support and resistance, right? 76% of the time we should trade between 525 and 550 as right now. Any questions on tools? Okay, so we have tools. Then if you want to follow my trades, you can go to Elite Trading Circle, right? Click on trade log and basically look at some of the trades, right? So I've been hedging, right? In the past 2 weeks, this weekend I did QQQ put spread. Last week I did spiders, and now I closed spiders QQ and I reopen, right? Hedging in case we do drop to 525 level. So you have example of hedges. Google, I closed with Google because the position was down. The options spread position was down 50%, so I get out of the trade. So you have a combination of both option and stock trades in Elite Circle, right? And you can see all of the trades. You can look at the SMS alert, set up an email to alert you, and you will see both stock and option trades. Or everything that we do, we have live trading room, and then you have access to all the tools and picks. If you're just looking for stock trades, we have Robo Investor. If you just look for option spread strategies, we have Premium. Spread Trader will show you only spread trades. Any questions? If we reach 530, are we in correction? I mean, I think we're in correction right now. Even with 5%, we are in correction, right? Correction just means a pullback, right? I don't think there's a, I mean, bear market considered to be 20% pullback. You know, anything between 5% and 20% considered to be healthy correction, right? But I think in terms of trend change, if we drop below 500, which would be 12% correction, right? So if we break through 495, and that's, you know, right now we're down 5%. If we drop another, you know, if we drop more than 12%, I would say that that would signal to me that the long-term and medium-term trends are changing, right? Instead of having this strong bullish momentum, we are at least trading sideways, right? So bulls do not want to see a break below 495, right? But as long as we are at 530, 520, I think it's healthy, you know, 5-10% correction. There's nothing wrong with that, especially August, September, especially when, you know, value stocks continue to outperform, right? As long as value stocks continue to outperform, small caps continue to rally, this is all considered to be a bullish signs. Any questions? 10% is the definition of correction. Okay. Yeah, if this is the term you're using, then, you know, yes, if it drops more than 10%, then we're in correction. I don't know what you call when we're down. I mean, QQQ is down 10%, right? Or close to 10%. So at least QQQ or SMH is down, basically in correction, right? So you can, depends how you, I wouldn't be keen on, I mean, these terms probably don't mean much, right? But you know, I would be actually just paying attention to key support and resistance level. Like QQQ is right at the 450 level, right? We're right at that 450 level. Basically, give up all of the gains since the March, right? So QQQ already gave up all the gains in the past, you know, 4 or 5 months. So that's pretty. I mean, that's a correct. It's a pullback. It's a healthy pullback correction, but, you know, bulls want this level to hold after the Powell speech, right? Because if we break through 450 after Powell's speech, well, then this pullback could become a little bit more meaningful, like 20% pullback, right? So bulls don't want to see that. So there's a lot of pressure on Powell, but let's see if he can deliver on what people want to hear. Silver and gold is a head scratcher, right? I think it's overdone, obviously. A lot of it was positioning, right? We have this large demand for calls, right? And we know that when you have this large demand for calls and you have kind of these rotation trades that are interest sensitive, anything goes wrong, then you do have basically large move to the downside. And you can still see 28 and 30. So that is contributing, right? Because dealers are short gamma, and when dealers are short gamma and market moves, they have to be delta neutral, gamma neutral. They have to unload stock, right? So you see that. Fundamentally, I don't think anything changed. We still haven't dropped more than 50%. So I'm still bullish on silver and gold, but this is not a good price pattern, and it could be contributed to this violent move in yield, right? The 2-year yield now is less than 30 yield, and obviously all the asset classes are adjusting to that. And this move continues to be strong, right? After PCE data, we're, you know, 2-year yield and 5-year yield and 10-year yield dropping another 1%. So dollar is stable, so that's good. Japanese yen continues to rally on the stimulus intervention program by the Japanese government. High yield is stable, right? High yield is stable. It's actually making new highs, so that's positive for the market. VIX did jump to 20. It's pulling back today. We'll see for how long. Regional banks have a strong momentum, right? Small caps have a strong momentum. Germany, I think, recovering. Europe is recovering. Bitcoin recovered, right? You have a pretty decent recovery in Bitcoin, about 50-day moving average. So there are signs of, just rebalancing, repositioning. So for now, I think it's, a healthy, you can call it pullback, you can call it correction, however you want to call it. Yeah, Bitcoin is holding up well. I agree about it. All right, it's 10:05. Any questions about what Tradespoon is offering in terms of the banks? A lot of free education. We have learning center, trading guides, trading plan. We have newsletters. Please add info@tradespoon.com so you get our emails. We have YouTube channel. We have live broadcasts on YouTube every Wednesday. So please join us on that live broadcast when Scott and I trade. That's about it. Any other questions? So I can't tell you what to do with the individual position, right? I mean, I'm long IWM, right? You can see in my positions, I'm long IWM. That means I'm long carry, right? You can't be long carry and short IWM. They're very highly correlated, right? Biotech, carry, a big part of the small caps. So I'm long IWM, right? I think IWM is overbought. So actually today I trimmed my position, right? I trimmed my position. Maybe actually do it in, let's see. What my positions look like. So I have a spread and I have a stock. So spread is in the money, deep in the money. So it continues to grind high. It doesn't make sense. Spread, stock, I'm still kind of waiting. So, for now, I'm not going to do anything, but it continues to trade higher, right? Like JP Morgan, maybe I'll trim, right? So because JP Morgan, let's see, what did I enter it? Right? Like, I don't think this pullback is over, right? It's probably going to be another couple of weeks, even if Powell does deliver. So I bought it to 11.76. It's trading at what? $213 times, so 0.5%. Okay, so I'm still waiting. So JP Morgan is up. LA Lilly continues to drop. Silver. Oh, yeah, so for now I'm holding. I'm going to hold the position. But, in terms of carry or, personally, I would trim the position depending on your cost basis. It's reaching overhead resistance. It's kind of rolling over. It's session low. My thought process is always, if we have a break above this 225 level, okay, then you can start adding. But at 225, you want to trim it because we could be at 216 next week very quickly. So that would be my thought process. For position. Yeah, but let's talk closing bell. Scott is not Scott, but Keith is going to do closing bell. Position in carry. I mean, carry is not very liquid. Let's look IWM. I mean, carry is probably going to go where IWM is going to go. A couple of days, maybe divergence, but for the most part. So I don't know what your time frame is, what kind of long-term, short-term, but IWM, the next level of a lot of overhead resistance is at 230. We're 222, 225, right? There is a lot of short-term 225. So obviously not a lot of overhead resistance at 225. If Powell says we're lowering interest rates in September, small caps will take out 225 very quickly, and they will be at 230. On the downside, you really don't have any position until 250, right? 215. So it's going to be trading between 215 and 225 until there is a decisive breakout, right? And that's Wednesday. So Wednesday, we're probably going to be either below 215 or we're going to be above 225. I don't think we're going to just trade here, by next Friday. So that would be my thought process. Since you don't know if we're going to be below 215 or above 225, and you already have calls and you're making money, then I would trim. All right. That's all I have for today. Thank you very much, guys. You're awesome. Keith is going to do the closing bell, and I will see you on Monday. Thank you. Have a great weekend, everyone.